What's up, YouTube? Welcome back to the channel. Wait a minute. All right, syncing my audio. So I'm trying something a little bit different today. I'm actually going to live stream, record this video, and actually be able to edit it. That way I don't have to wait for YouTube to go ahead and stitch it back together. So today I want to talk about this article out of the New York Times, which is basically suggesting that Andrew Yang's tax plan is actually going to be it suggests it's more likely to actually work than Elizabeth Warren's, which is incredibly important because one of the biggest complaints with a lot of these like really progressive policies is that they're pie in the sky. They're unrealistic. There's no way that's going to be able to happen. And Andrew Yang, I think, for all of the issues that I have with his policies, tries to like double, triple, quadruple check to make sure things are actually going to be effective based on the way people actually behave. So let's dig into this article. Like I said, I'm going to go ahead. We're going to get through this as quick as possible. So this article came out yesterday. Like I said, New York Times. Headline: Yang versus Warren, who has the better tax plan? In the race for the Democratic presidential nomination, Senator Elizabeth Warren of Massachusetts and Andrew Yang, a former tech executive and entrepreneur, have both proposed bold plans for redistributing economic resources. Their plans are as different as can be. Only Mr. Yang's is practical. Now that's beautiful because not only does they say this right up front, but use the word practical. This is coming from the guy who has the pie in the sky idea of $1,000 a month. Back to the article. Let's start with some undeniable preliminaries. First, we live in a time of great economic inequality. Economists debate the roles of technology, trade, and public policy in explaining this fact, but there is no doubt that disparities in income and wealth are far greater today than they were half a century ago. Second, reasonable people can disagree about the role the government should play in addressing this inequality. The issue involves not just economics, but also political philosophy. Like most people, I have opinions on this thorny question, but I won't try to resolve it here. Instead, let's consider a simpler question. Assume that one way or another, the government is going to pursue new policies to increase the inequality of economic outcomes. Given that assumption, what is the best approach? Senator Warren has proposed a new tax on millionaires and billionaires. Every year, households would be taxed 2% on wealth exceeding 50 million or 3% on wealth exceeding 1 billion. The revenue, Senator Warren has said, would fund programs such as universal child care and tuition for higher education. The political appeal is clear. Millions of Americans would benefit from this new public spending, while a small sliver of the population would bear most of the cost. According to a new paper by the University of California, Berkeley economists Emmanuel Saez and Gabrielle Zuckman, who helped to design Warren's plan, less than 0.1% of families would pay this tax. So obviously that's what this is about. They're trying to target, you know, you hear the common phrase, the wealthy are going to pay more. Well, this is what she's saying. This is the typical political approach. This is the one that most people complain about. We don't want you redistributing wealth. But Andrew Yang has an answer for that. Determining how much those families would owe, however, would be devilishly difficult. One problem is that many kinds of wealth have no market valuation. Take Rihanna. She's fabulously wealthy, but to put a number on her wealth, the IRS would have to also estimate the present value of her songs and their possible future royalties. How popular will her songs be decades from now? And how much money will they bring in? Any estimate would be an educated guess at best, yet it would have to be made. In order for Warren's plan to work, they have to basically evaluate someone's net worth at any given moment. Well, in order to do that, you have to say, well, how much are things worth on the market? And if there's no market for them, it's kind of tough. Overestimates or underestimates. We continue. Similar situation arises for many family businesses. When businesses are sold, accountants often attribute significant value to an intangible asset called goodwill. To assess a wealth tax, the IRS would have to estimate the goodwill of every family business that hasn't been sold. Goodwill is hard to measure. It includes things like a business's brand name, reputation, technology, and its network of customers and contacts. Simple formulas that the IRS might use to calculate this could result in substantial inequities and perhaps litigation. Again, Yang is clearly about resolving any issues with bureaucracy or slowing things up. Like that's why he wants UBI, or one of the reasons he wants UBI to go to everybody. Instead of trying to figure out and making this thing like a means tested thing where we have to, you know, check how much your income is and where you live and whatever the qualifications would be, or where many would suggest there be qualifications, Yang is saying, no, that slows up the process. Let's just give it out to everybody because it's going to cost us less in bureaucracy to do that than it would for us to sit here and try to figure out if someone qualifies. We're going to kind of see that throughout all of his policies. He's a realist. He's like, I understand what you're trying to do, but you're slowing up my flow. More important, Senator Warren's tax would likely raise less revenue than its proponents believe, as rich people would take actions to avoid it. Now, this is super, super key. This is like the overarching theme of this article. People aren't going to pay. Like, when I have $100 million, I'm paying my accountants to make sure I keep all $100 million. Like, I'm trying to pay no tax. I'm going to go out of my way to do whatever I have to do to pay whoever I have to pay to minimize my tax burden. So Warren is looking at it as far as, hey, this is what seems like it would make sense on paper. This is politically what's good. Whereas Yang looks at it and says, well, I'm a rich guy. What do I do when it comes to tax time? Don't I call my accountant and say, how do we minimize the taxes? Or do I say, hey, I want to pay as much as possible? For example, Warren's tax may provide an incentive for high wealth couples to divorce. Whereas married couples would exempt $50 million of wealth from their tax, two unmarried partners could each exempt $50 million for a total of $100 million. Given the 2% tax rate, married couples could avoid $1 million per year in taxes by divorcing. And that's just what I mean. Like, people do things that make sense financially. Giving money to adult children would also reduce a family's tax liability. A married couple with 3 adult children could, by divorcing and gift giving, exempt $250 million from the Warren tax. In addition, rich folk planning to bequeath, I love that word. Sounds so regal. In addition, rich folk planning to bequeath much of their wealth to charity would have an incentive to accelerate that giving during their lives, shrinking the wealth base subject to Warren's tax. And I go on. There are countless ways for people with vast resources to avoid a complex tax like this one. In short, what Senator Warren's proposal says in political appeal, it lacks in workability. This is so key. Like, the fact that this article is even being written is amazing because, you know, just 3 weeks ago we were complaining about how Yang is being treated in the press, and now we have one of the biggest papers in the country talking about how realistic and doable his policies are compared to technically the front runner. Mr. Yang has a very different approach. He proposes implementing a value-added tax and using the revenue to provide every American adult with a universal basic income of $1,000 per month, which he calls a freedom dividend. It's easy to see how Yang's proposal would work. Value-added taxes, which are essentially sales tax, have proven remarkably efficient in many European countries, and the universality of the dividend would make it simple to administer. The Yang proposal would not only be more workable than the Warren plan, but it would also target those who spend lavishly. Consider 2 hypothetical CEOs, each earning $10 million a year. Spendthrift Sam spends all his money living the high life. He drinks expensive wine, drives Ferraris, and flies a private jet to extravagant vacations. Frugal Frank lives modestly, saving most of his earnings and accumulating a large nest egg. He plans to leave some of it to his children and grandchildren and the rest to charity. Ask yourself, who should pay higher taxes? The Warren proposal hits the frugal executive but leaves the spendthrift without a scratch. The Yang proposal hits the spendthrift hard and takes a smaller bite out of the frugal person who has saved his money. If you, like me, think that society could benefit from a few spendthrifts and more savers, Yang's proposal makes much more sense than Senator Warren's. This is kind of an interesting thing. Now listen, I'm YANGGANG, okay? But I'm not no fanboy, all right? I'm a realistic person. People who have more money are gonna spend a smaller percentage of their money on lavish like items. It is the everyday person who's living check to check or whatever, you know, the middle class, who make up the bulk of the luxury items purchased. So says luxury goods. I know we're talking about yachts. I know we're probably talking about Bentleys. I don't know specifically what items would be exempt. We know that food and clothing are going to be exempt, but as far as how the classifications of luxury goods is going to be broken down, I don't know. It's going to hit the middle class kind of hard, you know what I mean? But we also want to incentivize savings behavior. And that, I think, is the key takeaway. I mean, this article is actually very positive. I just throwing my 2 cents in on this. We talked the other day about, you know, financial literacy and the importance of that and how 58% of Americans can't afford a $1,000 emergency expense. Well, if we're incentivizing the behavior we want, which is the key, the background of all Yang's policies, by saying, look, it's going to cost you more to spend your money on lavish items. So now you have an additional $1,000 a month, which is going to be tempting. It's going to make you want to spend that money, but it's going to cost you more in taxes. Maybe you'll make better financial decisions. It's going to affect everybody. It's not just going to affect that 0.1% as Warren's tax plan is aimed to do. However, since the 0.1% are going to go out of their way to skirt those taxes anyway, let's just make it a universal tax, and then we all kind of learn to do better with money. I like what Yang is doing. I like the way he's thinking. And if the goal is to raise substantial revenue from rich taxpayers to strengthen the social safety net, Mr. Yang's plan is more likely to succeed. Let me repeat that. If the goal is to raise substantial revenue from rich taxpayers to strengthen the social safety net, Mr. Yang's plan is more likely to succeed. Persuading voters to embrace Mr. Yang's idea, however, won't be easy. Under his plan, lower income families would get more back in taxes than they pay, but everyone would see their taxes increased. However, higher taxes are always a hard sell. Mr. Yang's plan is more likely to work. Whether it can win over public opinion remains to be seen. Who cares about that part? Andrew Yang is a pragmatic person. He understands that his goal as a guy who's got a little bit of money and a family that he's trying to provide for is to make sure Uncle Sam gets as little of that money as possible, and that's what he's paying his accountant to do. And people who have way more money than him are probably doing an even better job than he is. I always talk about how what I like most about Yang is the way he thinks. It's the way that he arrives at his conclusions. He doesn't just say, oh, here's a problem I want to solve, this is the solution. He's like, okay, well, that's the solution, but what happens when that solution is applied in real life? By getting rid of the possibility of someone being able to use all these different tax shelters and making it a universal tax, but still at the same time giving you $12,000 a year, which people seem to forget about, I think the net is you're still going to win, assuming you're just not tricking off your money. And I understand we all have luxuries that we want to buy in life, okay? But over the course of a lifetime, when you're getting this extra 12 grand, I think you can make wiser financial decisions to arrive at your financial goals without spending all your money in VAT tax. Like, are you really going to spend all of your money in VAT tax? Because people seem to really be concerned about how much this is going to hit them. What are you buying? I mean, I'm not judging, but like I said, 58% of Americans don't have $1,000 for an emergency expense. So, well, I don't know. Maybe take that financial literacy class Yang is offering. And it's just clear that Yang thinks on a different level than everybody else. He's not the pie in the sky that you used to hear about Bernie Sanders. That was always the complaint. Bernie, how are you going to do that? How are you going to pay for that, Bernie? And that would just kind of kill him. Like I said, what I love about what Yang's talking about is he's looking at the actual behavior. And not only is he talking about the actual behavior he's trying to curb, which is reckless spending, he's also trying to figure out how we can actually bring in the money for these programs that he's proposing. He's not just saying things to get elected, as some people would lead you to believe. Yeah, there's definitely room to really clarify these policies. But the fact that they're on the books, the fact that this is actually a conversation is what's most important. Yang is talking about things that everyone else is not talking about. That's what I care about. I care about the way he thinks more than every little thing that I disagree with. You're not going to find somebody who has the perfect policies. They don't exist. Nobody's perfect. Yang believes different things that I believe. But the way that he arrives at his conclusions is what's most important to me, because I feel like based on the way he thinks, I could have a conversation and get him to consider my point of view. Yang's got solutions for today and the future. Warren's just giving us the same old political jargon that we've heard a million times that in practice just doesn't work. That's why his tax plan is more effective, and that's why he should be our next president. So, with that said, I'm gonna get out of here. If you guys enjoyed this video, make sure you give it a like, subscribe for more. Thank you for coming out. I appreciate you. I will see you guys in the next video.